If your QuickBooks feels messy, confusing, or off, you're probably making one of these 5 mistakes. As a bookkeeper who has worked on a lot of cleanup projects, I see the same issues over and over again, and they can cause major problems if you don't catch them early. I see this all the time. Transactions get recorded manually and then added again when they come through the bank feed. The result? Your profit and loss statement is inaccurate and unreliable. Your income and expenses are inflated, and you're making decisions based on bad numbers. You can still manually record activity and then match transactions in the bank feed, or wait for transactions to post in the bank feed and categorize them from there. Rules can save you a lot of time, but if you use them without reviewing transactions, they can create big problems. Let me give you an example. Let's say you set up a rule to categorize all Costco transactions as office supplies. A few times a month, you purchase gas from Costco. If you blindly add all the Costco transactions with the rule, you would end up with thousands of dollars of miscategorized expenses. So pause, take a moment to review the transaction. If it was a gas purchase, simply change the expense category to fuel and add it. This is where small mistakes turn into big ones. Reconciliation isn't optional. It's how you catch errors before they snowball. Even the best of bookkeepers can make an error when entering a transaction or forget to add activity that occurred during the month. That's why reconciliation is a necessary part of closing out the month, not an optional task. If you catch an oversight early on, then you can correct it and ensure your books balance. Otherwise, you can have an issue from months or even years ago that's throwing your numbers off, and it can get worse with the passing of time. So at month end, when you have your bank statement, complete the reconciliation process, which means comparing your books to your bank statement and making sure everything matches. When you make a loan payment, it's not all going toward the balance. Part of it is interest and sometimes escrow. If you record the entire payment to principal, you're reducing the loan balance by too much. So it looks like you owe less than you do on your balance sheet. How do you fix this? Instead of recording the full payment to principal, you need to split it between accounts based on your loan statement, such as interest and escrow. QuickBooks isn't just data entry. If you don't understand how things connect, it's very easy to create errors without realizing it. Sure, it's a software program and most of us are native computer users. However, QuickBooks Online is not merely a program for data entry. You need to understand basic accounting principles and how the features fit together. This helps you easily identify the results of changes you made and to track down errors. If you're feeling overwhelmed or you're not sure if your books are accurate, you're not alone. You can schedule a consultation with me. The link is in the description.